Welcome to The Other Side of Wall Street with your host, Ron Harrison.
Welcome, everybody, to another edition of The Other Side of Wall Street. My name is Ron Harrison, and I'd like to welcome you to another hour of what I would like to call, for lack of a better word, some financial education. And the reason I'm starting out that way is that I had lunch yesterday with one of my students, and he brought up a good point that, in all of our schools, colleges, we teach, every subject imaginable pretty much to our kids, on pretty much every subject except finance, and more specifically, except how to manage your money. I mean, that would be the specific thing that I'm talking about. But, it just amazes me of how that part of our life, our education, is just passed over, like it's not even important. And, I heard somewhere the other day, it was on the news, but I tuned in late, that there is an organization somewhere that is attempting now to go into high schools and actually set up programs teaching the kids how to trade the markets. They're setting up trading terminals, of course, not real accounts, paper accounts and so on, but they're teaching them, or at least that's their goal, how to do this stuff, which, if they start at that young age, imagine, the difference, the life-changing things that could result from. And, that never stops to amaze me, just how much this part of everyone's life is just ignored, like I just said. You see people all the time, and it always amazes me. You'll talk to people, and, let's say they're talking about cooking. And they can rattle off all these complicated recipes, exactly how much of this, exactly how much of that, you do this, you do that, all the steps that it takes to create this, whatever they're talking about making. They can memorize, recipe after recipe after recipe with no problem, or, many other areas. How many times have you talked with people that love their wine, let's say, for instance, and they can tell you all the history of this brand of wine, and what went into making it, and how long it aged, and what areas it came from, and all these, because they've taken the time to figure that out. But have any of those people taken the time to figure out how to manage their money? I mean, imagine if you went into a restaurant. How many of you would do this? Walk into a restaurant, sit down, the waiter comes out, brings you your water, brings you your menus, and you don't even bother to look at the menu. And this is a restaurant you've never been in before. You don't know the waiter, just, totally trying this place out. And you walk in there, and the waiter comes out and says, are you ready to order? How many of you would just say, just bring me whatever you want? Go ahead, surprise me. I mean, you wouldn't do that because you don't necessarily trust the restaurant. You don't know the waiter. Who knows what you would get? So, you would want to look at the menu, decide what you want, and order that, not just leave it up to this guy. But yet, in the same sense, how many people will walk into a brokerage firm, give them their money, and basically say, do whatever you want. Just make me some money. But just go ahead and do whatever you want because I don't know anything about this, so I'll just trust you. So, you wouldn't do it in a restaurant, but yet people do it every day with their money. And to me, it just doesn't, it doesn't make sense. Another restaurant analogy would be, how many of you people have been in a situation to where it's a restaurant where it's a bring your own bottle, like you have to bring your own bottle of wine if you want to drink the wine. And if you lived in Utah, that would be the case everywhere you go, because and I think a couple other states are the same way, but their liquor laws are such that they can't sell the liquor. They can open the bottle for you, but they can't sell it. So, imagine if you went to a restaurant and you brought your own bottle of wine, and say there were you and a couple of your friends, 3 of you went into the restaurant. So the waiter opens the bottle of wine, and I don't know, what would you say a bottle of wine is? Probably 4 glasses, 4 good glasses of wine. So, the bottle's open. So you pour each of you a glass of wine. So that's 3 glasses. And you take the remainder and you give it to the waiter. So that's 1/4 of your bottle of wine gone that you're not going to get to drink. Well, when you take your money to a brokerage house or to one of the, the bigger guys, and you drop off your money and say, do whatever you want, just make me some money, you're doing the same thing as with the bottle of wine. You're basically, in the end, giving up 1/4 of your money to fees, to commissions, management fees, and so on and so forth, because you haven't taken the time to learn how to do it yourself. You're trusting someone else to do it. They're taking their chunk out of it. And, who knows what you're going to get. And again, back to the education thing, it seems to me that if people took more time trying to educate themselves, which this stuff is not that hard, people, it really isn't, on how to manage your own money and stop letting other people do it for you, you would be way, way ahead. You'd feel better about yourself. And you can't imagine the difference it could make. But for whatever reason, people just seem to think that, this is just too hard to do. I can't do it myself. And, and that is a big problem, because when people get into this stuff, there are so many choices, and it's so intimidating. I mean, if you're new to all this, just buy a Wall Street, or even look at your Sunday paper in the business section, under the finances where they list all the stocks and all the financial data. Just start looking at that paper, that page, and if you don't understand what they're talking about, it might as well be in a different language, because it's just so intimidating. But when you get into this industry, if you're new at it, I mean, you have so many choices and so many options that I think that's why people, maybe stick a toe in and go, oh, no, it's not for me. It's just too much. Like where would you start, when you first decide to get in if you want to learn this? Where do you go to learn this stuff? What kind of courses can you take? Who do you trust, again, to teach you this stuff? Which market, do you want to be involved in if you're going to do this? Do you want it to be stocks? Do you want it to be options? Do you want it to be currency? Do you want it to be futures? Do you want it to be bonds? I mean, there's so many choices. How do you know which one's the right one for you? How do you know what to do with those instruments even if you decide which one you want to go with? Which trading vehicle is best for you? Again, kind of the same thing. There's so many choices. How are you going to go about doing this? If you decided that you wanted to trade currency, if you want to trade stocks, or if you want to trade options, whatever, once you make that decision, then you're going to have to start, if you want to go to the next level, you're going to have to start figuring out what kind of analysis do you want to do. Do you want to do what you've probably been used to, which is fundamental analysis, which is, researching the companies, the management, the products, the balance sheets, those kind of things? Or do you want to do technical analysis, to where, and I've talked about that before, to where it's the theory of that is that every fact known about these particular companies are built into the price today. So, you can do technical analysis and kind of bypass, the fundamental analysis, which is how I prefer to trade. Then you have, which tools do you want to use? There's so many different platforms, different charting services, different, trading platforms. We actually place the trades. Different brokerage houses have different, features on their platforms. They're all trying to compete with each other, but one wants to offer something the other one doesn't have. If you had decided, for instance, to go into currency, currency, Forex, trades 24 hours a day, pretty much 5 days a week. It's open from about, as far as our time goes here in Arizona, from about 2 o'clock on Sundays to 2 o'clock Friday afternoons. It doesn't shut down. So it follows the sun around the planet. So, if you wanted to trade that, you've got three markets. You've got the U.S. market, the Asian market, and then the European market. So then you got to decide which time frame. Maybe you work a daytime job. Do you want to trade, the Asian market in the evenings? Do you want to be up in the wee hours of the morning trading the European session? So, you got choices there. And so many people, when they get into this, when they decide they want to try to get into this, they start looking for, what I like to call a golden strategy, to where they're looking for this holy grail of a system to trade, where they think, because of the media and what they've heard, and the hype and the commercials and the email advertising they get, that there's this system and that system, and any particular one will claim that we never lose, perfect system. Well, there is no such thing. There is no trading system that will win every single time. But people tend to look for that, and what happens is they get into they might buy a system, they might take a course, and then something goes wrong, and they dump it because they think that somewhere out there's a strategy that will win every time, and that doesn't exist. So people keep jumping around from system to system to system, looking for this holy grail. That's never going to be there. So, that's another problem, because, people have their expectations set too high, and those things don't work out. And so they bail and they go to something else. And many times in everyone's eagerness for success, they rush. And what that causes is they will, put the money in an account, they'll take a quick course, and they'll start trading, and they think it's going to be easy, and they haven't put the time and the effort to learn all the ins and outs and all the little details that it takes to do this correctly. So they rush into it, they start making some trades, and then they lose money, and again, expectations aren't met because they're too high. They give up, take the money, give it to, XYZ broker's house and let them manage the money. And now we're back to the restaurant scenario. Just do what you want with the money. Just make me some money because I can't do it. I tried and it didn't work because they gave it only a half-hearted try to begin with. So there are so many variables and so many, confusing parts of this that if you don't do it right, you're never going to be able to do it. But at the same time, you shouldn't ignore it because you could do so much better with your money than what other people are doing for you because their first and main focus is making the firm's money first, making it themselves, their commissions, and then you're at the bottom of the chain there. So if you make money, great, and if you don't, they've already made their money. So you're third in line where you should be first. So it's time for the first break. I'll take that.
Here's another look into the world of trading.
Tired of losing money in the markets? Ever feel your trading is nothing more than gambling? Well, if you looked at gambling from a different perspective, you'd realize that there is one side that wins almost every time, and that's the house. Well, your trading should be no different. We are the other side of Wall Street, and we are former Wall Street traders. And while on Wall Street, the most important lesson that we learned is how the brokerage houses traded their own money, as opposed to how they recommended their clients trade their money. In essence, they made sure they were the house and their clients were the gamblers. So we started the other side of Wall Street to teach people how to stop being gamblers and start being the house. So let us teach you how to give yourself that same 80 to 90% chance of winning on every trade you make while your account remains mostly in cash. Be the house. Call us at 949-734-1698. And again, that's 949-734-1698. Let's make some money. Welcome back. I have one caller on the air. Guy, how you doing?
Yes. Good. How are you this morning?
Fine.
Very good.
What can I do for you?
I was listening to the radio and heard your show, and you just touched upon a subject that I think is so vitally important. And like you said, you have to ask the question, why do they not teach children about finance?
I totally agree.
It just absolutely is amazing to me that it's such a vitally important thing to know. And when I was young, fortunately, I had some mentors or people who just told me some very simple truths. And one of them was that if you save $1 a day and can earn, of course, this was many years ago, you could actually earn interest of 10%, that you would retire, I think it was at age 65 or 66, compounded, a millionaire.
Mm-hmm. Yep.
And so, there was a program when I was in school where they did set up an actual account for you, and they had these little stamps, and you had a bank account, and I started saving, and I had $1,000 by the time I was 14.
Yeah, but see what I would like to see the schools do is actually teach the kids how the markets work. All the mechanics. Not just the saving part, but actually how stocks work and how bonds work and how options work and how the brokerage houses work and placing orders and managing your trades. If a kid had that course running for the entire school year, I just imagine what they can cover. My courses only run 12 weeks, and I have people doing it. Imagine if you had an entire school year. It'd be amazing.
Exactly. And I'm a trader. That's what I do.
Oh, so good.
I trade Forex, currency trading.
Oh, one of my favorite.
It's, learning to trade is a journey.
Oh, yes.
And I heard you say something, you were touching upon the psychology of trading. And boy, it's all about you. I learned that you don't trade against your broker, you don't trade against a market maker, you trade against yourself. And
Yep.
when you're looking for the enemy is within, and the enemy is you.
Yep. Absolutely.
And it's a journey. I'm glad I stumbled upon it because I really enjoy it, and you're in tune with what's going on in the world. And like you said, you have the different market times to be able to pick what market you want to trade in, whether it's the Asian markets or the European markets.
So are you pretty much short term when you trade, like you're in and out, or do you take longer term positions?
You know something? If you want to turn into Dracula, yes, you could be a short-term trader. But that's not really what I'm about. And when I started, I was trading without knowing anything about what I was doing. And I lost a lot of money. Fortunately, I'm tenacious, if not intrepid, and have stuck with it for quite a while and have learned a great deal. It's just amazing. It's the opposite of what you think, always.
Always, yep.
And it's hard not to be a contrarian trader. That's another issue and another fight. But I like to swing trade, and in some cases position trade. So I'm in a trade from 6 hours to 6 days, and if I'm position trading, obviously a lot longer than that.
So you have to put your stops a little farther out in that case, take a bigger risk.
A little farther out.
Yeah.
Yes, you do. And, that's the other thing. How many people use stops? And
not enough. Yeah.
And how many people know where their take profit is before they get into the trade?
Yep.
I mean, it's easy to get into the trade. It's harder to know exactly where your take profit is going to be.
Well, I've mentioned that before on other shows, that the majority of, let's say lesser educated people that are trying to trade end up falling into the trap where they take big losses and small wins because of the psychological side of it again.
Right, premature exits.
Because they're afraid they're going to give up what little profit they have, and be at the same time they can't take a loss when they should because they don't want to lose, so they keep riding it out until it gets so big they have to take it.
Exactly. Well, I would be really interested in knowing how the deficiency in public education in this area could be addressed. And I don't have the answer to that. I used to teach. I'd actually love to do it, and I've actually gone to the school where my daughter attends and offered to spend a little time with the kids on the subject. So we'll see what happens there.
Yep.
But good topic. Thank you very much for bringing that up.
Thanks for the call.
And good. Thank you.
Great call. And like I said, imagine what we could do if the schools had courses that ran for an entire school year. I mean, imagine the ground they could cover on this subject. So anyway, back to where we were talking before. If you want to go back to last week, the thing that I was trying to cover there was, talking about the psychological side again, which is the most important side of doing all this. It'll be the make or break, success or failure kind of deal. So you have to address and believe that the psychological side is going to be the part that makes or breaks what you're doing. And last week I was touching on some things called cognitive biases, which are basically, ways that we have been conditioned, throughout our entire life to deal with certain problems. And those biases that we end up forming, even though we don't realize we have and we don't realize they're there, those cognitive biases tend to pop up when they shouldn't and cause us to do things we shouldn't be doing. And just a quick review before we take our next break, the first one was a loss aversion, which is a tendency for people to have a strong preference for avoiding losses over acquiring gains, which is what I just talked about with Guy on the phone. People tend to take because they refuse to take the loss, or don't want to take a loss because it hurts, it's painful. They end up trading and develop a method of, big losses, small wins, which over enough time will end up with zero account balance size. The next one was a sunk cost effect, where you tend to treat money that's already been committed or spent as more valuable than the money that may be spent in the future. The next one is disposition effect, which is the tendency for people to lock in gains or ride losses, which is kind of what we also just referred to. Outcome bias, tendency to judge a decision by its outcome rather than the quality of the decision at the time it was made. So, if a trade goes bad, all you do is focus on the fact that it was a bad trade. You may have done everything correctly. The trade was put on perfectly. All the conditions were met. It just didn't work out, and that's okay. That's how it goes. That is, you got to have that. You got to expect that, and it will happen. Another one was recency bias, tendency to weigh recent data or experiences more than earlier data. So you could have had a good trading record, and I see that in my students. You may have, you could have 20 wins in a row, and things are going along smoothly. Everybody's happy. Then you have a losing trade. Well, that losing trade knocks them off the track. All of a sudden, forgot about all the success we've had in the past. Now we have a losing trade. It doesn't work. The system doesn't work. Now what? I've done all this for nothing. And that's so wrong. We also have an anchoring bias, a tendency to believe things because many other people believe them. That's also bad. That's media driven. You can't do it. It doesn't work. A bandwagon effect, tendency to believe things because many other people believe in them. Same kind of deal. There are many different books out there you can read, or videos you can watch. But one of the ones that I like was a guy that was actually out in the field with a herd of sheep, and he was scaring them, scaring one, and they'd all follow, and they'd all run this way, and they'd all run that way. It was, like a school of fish in the water. One turn, they all turn. So, and so many people, that's how they trade. Because everybody else is doing it, they do it too, and that again doesn't really equal success in this industry. And belief in the law of small numbers, the tendency to draw unjustified conclusions from too little information, and that is just like what I said in the earlier session. We rush into things, and so we want to make trades, we want to get our account open and get it going, and we don't put the time in to really learn what we're doing and why we're doing it. So we start making decisions based on not enough information, not enough education, and that just doesn't work. And that's really, those are the cognitive biases that I talked about last week. This week I would like to go, a little farther and, again, deal with our emotions and some other factors that can really affect, what you're doing there. And the first part really is ego. The ego is kind of like the one emotion that kind of controls, it's kind of the controlling factor of our other two enemies, which is fear and greed, which is really the two that do the most damage. But our ego is kind of like the central figure of those three, like three musketeers, where ego is the most important. And it's time for a second break. Take that.
Here's another look into the world of trading.
I have a question. How many of you think you can predict the future? Did you know that you're trying to do just that when you purchase a stock? When you own a stock, the only way you can profit is for the stock to increase in value. And if it trades flat or trades down, you end up losing. What if I told you that there is a much better way to profit without ever owning that stock? And what if I told you that you could take a position in that same stock and profit no matter what the stock does? That's right, you can profit if the stock goes up, trades flat, or goes down. No matter what, you profit. This is how the pros trade, and this is how you should be trading. We are the other side of Wall Street, and we would love to teach you how to trade like the pros, increasing your odds from 1 out of 3 to almost 3 out of 3 on every trade you place. Interested? Call us at the other side of Wall Street at 949-734-1698 and sign up for one of our courses. And again, that's 949-734-1698, and let's make some money. So back to our psychological portion of this episode. I was talking about ego, which kind of controls or facilitates fear and greed. And when it comes to ego, if we don't keep it in check, and if we just listen to what it's saying, it will always try to convince us that we must not and cannot be wrong. And I'm talking about, well, I guess probably in terms of anything, but now we're talking about in the world of trading. And secondly, it will tell us that we must not and cannot lose. So if you're trying to structure a trading plan and you're trying to make the markets work for you, but yet at the same time, in the back of your mind, it's someone is telling you that you cannot be wrong, you must not be wrong, and you can't lose, you must not lose. So number one, in trading, there will be times when you're going to have to lose because every trade does not work. You've got to accept the losses, and it's impossible not to be wrong when you in this world of in this environment of trading. You will be wrong because number one, as I've said many times, you cannot predict the future. So anything can happen as far as in this world of finance, of money, of markets, and so on. So since you don't know what's going to happen, you can't predict the future. There's no way to say that every assumption you make is going to be right all the time, because it's not going to be. So it gets down to good, money management, good trade management. But you will be wrong and you will lose. And if you let your egos tell you that neither of those is going to happen, it's going to cause you to make decisions that ultimately will make you be wrong and make you lose. So now if we want to look at more specifically at our other two buddies, fear and greed, let's start with fear. So how many of you can name, let's say, 4 primary trading fears that we would have, as we're trying to put our money to use and make money for us? And 95% of the trading errors that you're likely to make, causing your money to just, go poof and be gone, will stem from your attitudes about these 4 trading fears. So number 1 would be the fear, like we just said, of being wrong. Everyone's afraid they're wrong. So they're going to be wrong. So they try to do everything they can to circumvent that fear of losing money. Our money is very precious. So when we put our money into our accounts, place trades, we're so afraid that we're going to lose that money. And I always say you should never trade with money you can't afford to lose, because if you're trading with what's called scared money, which is money that you borrowed or you're taking from something else that you desperately need it for, trying to do this, last minute gamble, like, bet on something, double your money and pay a bill. That's not the way to trade. The money you have in there has to be money that you can afford to lose, the money that's not already, ear tagged for something else. So it has to be free money. Fear of missing out. How many times, do we get our accounts open? New guys come into the market, they open their accounts, they see the market shooting up, and they're afraid they're going to miss out on a run. So, they have to make a trade. They have to get into it. They have to do it. I even have, students that are taking my classes that many times will get in and go, I got to start trading. I got to start trading right away. How quick can I get my account open? I tell them, I said, whoa, slow down. Let's don't get in this too fast. The market's always going to be there. There's always going to be trades. Don't rush into it. Again, like I said in the beginning of the show, how many people do this, and they do it half-heartedly because they rush into it and they want to do it quick. And then it doesn't work. Then they're disappointed. Then they give up. And then they give their money to somebody else. And now they're out of the game. And now they're letting someone else make money off their money. And lastly, there's the fear of leaving money on the table. So, a fear of maybe not getting every penny that you can get out of a trade or out of an investment. And it's virtually impossible. You're never going to be able to pick the tops of a trade. You're never going to be able to pick the bottoms of a trade. So the people that say they can do that, they can't. So don't worry about, managing trades. 2 important factors, which is you've got to manage your losses. Obviously, you shouldn't. And let me stop there and elaborate on that. If you remember back a couple weeks ago, we had a couple trades that didn't work out the way we wanted them to. It was Google and CMG. And in particular, I have one student that he was only in the Google, still is. But because that trade went bad, he has not done a single thing since then. He's just sitting there looking at that Google trade, thinking that it's going to heal itself, I guess, or something. But he has totally frozen his thinking because of that one trade. So he has not made a single trade since then. He has not done anything to repair that trade, to fix it, to make the adjustments needed, anything, any way you want to look at it. And there are many things that we have done, that you can do, and we have done. We've made, several trades. We've made at least, 4 or 5 trades since then, generating income to offset that loss. But so many people will get into a trade, it'll go bad, and they stop because, fear kicks in. I'm not going to do another thing. And what's that going to do for you? If you don't do anything else, then the losing trade has won. The losing trade has shut you down. It has stopped your thinking. You become so focused on that losing trade. So, the blinders have become so big now that you can't see. And the markets in general, whether we're doing options, Forex, futures, doesn't matter. It's full of opportunities. There are many more trades out there available for you to take than you could ever afford to take because you only got so much money. So your trades have to be limited to your account size. But there are so many trades out there all the time. All you have to do is look for them. But so many people, when the trade goes bad, especially if it's early on in their, endeavor into doing this. But trade goes bad, they stop. They're frozen, fear takes over, nothing else is there. So with these blinders on, now they don't see all these other trades that are available. They don't exist. So the only thing that exists is this losing trade. And for whatever reason, they think if they just sit there and stare at that trade long enough, it'll get better. It'll fix itself. And it won't. Not unless you do something about it. And the biggest part of doing something about it is trading your way out of that. Don't let that losing trade be the end of the whole deal. Because, like I said, at that point, the losing trade wins, you lose. So how many, talking about these 4 fears that I just outlined, those 4 things can result in quite a few really common scenarios, which if any of you, I know that the people that have never traded probably maybe haven't experienced this, but those of you that have kind of dabbled in it, and have been giving it, the best try you can, not knowing all the ins and outs, how many of these scenarios have possibly popped up? So for instance, staying in a losing trade too long and hoping it will turn back in your favor. Okay, like crossing your fingers, saying to yourself, I know it'll come back. I know it'll come back. And that's the same scenario as I told Guy when he called, that people just tend to stay with their losing trades too long, take too big of losses, and they tend to get out of their winning trades because they're afraid they're going to turn into losing trades. Again, fear kicking in. Number 2 would be not getting into a trade when your entry signals are confirmed because of your fear of the unknown, which is really possibility of losing. So because you had a loss, now you're frozen. Now you don't want to take any more trades because you're afraid they're going to be losing trades too. So again, fear has won at that point. Number 3 would be getting into a trade late after you've missed the entry signal because you're afraid of missing out. So again, that's leaving money on the table, and you have the trade die out and reverse against you. So, waiting too long, it is very bad, because by the time you decide to get in, many times the trade has already run its course. Whereas if you'd have got in when your entry signals indicated it, you'd have been much better off. And those entry signals, if you remember, are factors of our trading plan that we need to create when you start trading. You got to have a checklist of conditions that you want to see met before you get into a trade. And when those are met, you get in. And number 4 would be exiting too soon or too late because you're trying to guess the maximum top or bottom of the trade instead of following proper exit and entry signals. So I just talked about that a little bit ago. You can't do that. There's no way to predict where the top and the bottom is. You just have to know. And actually, our other caller, Guy, indicated that too. You have to know your exits, and you have to know your exits on both sides. You have to know the downside. If it goes too far, take the loss, get out, accept it, because they will happen. Don't let it ride. Don't be telling yourself, I know it's going to come back, I'll just wait. Don't wait. Get out. And you also have to know where your profit exits are. When it gets to a certain point, what are you looking for? Get out. And that's called managing your winning trades. And managing winning trades is equally, if not even more important, than managing your losing trades. Because losing trades will happen. But in many cases, like for instance, we had 3 trades on last week. 4 trades, four positions, three stocks, 4 positions. And they would have all expired today. They would have expired, yesterday as far as when the market's open, but all the actual mechanics of it happens on the Saturday after the 3rd Friday. So these were option trades. And all those trades could have ran to expiration. And these were on weekly options. So all of those trades could have ran through Friday. They would have expired worthless. Everything would have been finished today. Monday, come in. Your account would have, your account would have more free cash because those trades have expired. But what we did was we closed those trades out on Thursday, allowing that money that we had invested in those 4 positions to be freed up, because it was my goal to put more trades on, more weekly option trades, that is, for the coming week. And many of you people might not totally get all this, but what we're selling is time. We're selling time value, and time is the main factor of where we're getting our money. And in weekly options, we have very little time, so every day is critical. So what I mean by managing your winning trades is these are all winning trades. We could have let them go, expire, everything would have been fine. But they were basically almost as worthless as they could be on Thursday. So by closing them out Thursday, that freed up the cash to where we could put new positions on that. And weekly options, by the way, begin on Thursday and they expire the following Friday. So you got a week and a couple days there. And since we're selling time, what we're looking for is time decay. Every day that goes by, those options lose a little bit of value for the option buyers. We are the option sellers. So good trade management was closing those trades out early, taking that cash that was involved in those trades, placing new trades on Thursday or Friday of this week, so that we have the advantage of having the weekend go by and having that extra time decay work in our favor, as opposed to waiting until Monday to put the trades on and then already having that weekend time decay have happened and we didn't benefit from that. So managing your winning trades many times means getting out of them when they get to a point to where there's no reason to stay in them anymore, and putting that money to work on new trades that can actually produce more profit for you in that same particular period of time. And let's take our last break now, and we'll be back in a few minutes and continue this. Hey traders, want to jumpstart your trading? Well, I would assume that since you're listening to this podcast that your answer would be yes. And as they said in The Godfather, what if we made you an offer you can't refuse? And that's exactly what we're going to do. How would you like it if we gave you all the trades we make in our own accounts in real time so you could trade right along with us and profit as we do? And what if we met once a week for an hour to discuss our current trades, any other trades you may have open, plus discuss any problems you may be having in general with your trading? And that's 1 full hour of group coaching each week. Also, what if we threw in an additional 1/2 hour of private one-on-one coaching each month to privately work on issues you may be having with your trading? It could be things you didn't feel like sharing in the group sessions. Also, what if we threw in a weekly end-of-week market review analyzing the past week's market and what to look forward to for the upcoming trading week? That will be delivered to your inbox every Friday after market close. And what if we threw in a free copy of our latest book, Reprogramming the Trader's Mindset, to help you get your trading emotions of fear and greed back in control? And what if we also sent you our monthly newsletter packed with trading tips and upcoming market events? That would be very useful, I'm sure. And to cap it all off, what if we gave you a 30% discount on all of our live 3-day trading seminars? So altogether, this adds up to $1,269 in monthly value, plus another $1,680 in course discounts to use whenever you like. And if you think all this sounds good, then you must realize that this is a very powerful addition to your trading business. And as with any business, in the beginning, you will need a mentor or support team to help your business grow and to keep you on track to achieve your maximum trading potential. So the small cost to this extensive package is only $49 per month. And of course, you can cancel at any time, but since you will be making far more than the cost of the program by just copying our trades, we doubt you're going to want to cancel. So don't wait any longer. Sign up today. Go to tradersacademy.org. Again, that's www.tradersacademy.org. And do it soon because memberships are limited. And it's our promise to you that if you copy all of our trades and you don't make at least double the first month what you paid, we'll gladly refund your subscription payment. So join us, and together, let's make some money. So continuing on with our list of conditions that are caused by our good friend Mr. Fear. Next in line would be, for instance, moving your stop loss order to avoid taking a loss. And this goes back, remember I said ego will tell us, will constantly be trying to remind us that we cannot be wrong, we will not be wrong, and we will not lose money. So how does ego, and fear, control what we do there? Is how do they try to manage that goal? Is that they convince you to move your stop loss order to avoid taking a loss, because until you actually take that loss, it isn't a loss yet. It may be, but unless it's said and done, it's not a loss. So that's our way of working around that. So thinking the market will turn around and continue in your favor. Like I said, how many times have people said, if I just wait, I know it'll come back. I know it will. And it doesn't happen many times. And what happens is you end up taking a much larger loss later on. So, the markets are going to do what they're going to do. You can't put your money on the line and hope that it comes back. And last is not placing a stop order or loss order at all. This way you can avoid the fear of losing by not having a solid stop loss. So you can wait it out as long as you want until you run out of money. I do have a call. Larry?
Yes. Hi, Ron.
Hi there.
Yeah, this is Larry. My wife and I have both taken your options class, and I just wanted to share something with you and your listeners that she had a trade on here last month and with Netflix, and she was going to call in today, but she's involved in a art and fair show, so she's not going to be able to. But what I wanted to let you know is that she put this Netflix trade on, then the Google thing happened, and it affected, of course, a lot of the stocks, but she ended up with she turned a $5,000 loss into an $8,000 gain, which I thought was phenomenal. But this is all a result of what she had learned in your options class. And I just thought that you might find that kind of interesting and how much or how valuable your option classes really are.
Well, yeah, and I'm not sure exactly what she did to do that, but the point is that you're making is that every trade is manageable, and just because a trade goes bad doesn't mean you curl up in a ball and say, this doesn't work, I'm going to lose money, oh my God, I knew I shouldn't have done this, as opposed to knowing the steps, knowing the mechanics, and knowing how to trade your way around and out of losing trades, and how to manage those losing trades, and how to manage winning trades. And like I said, there are just so many things that you can do to protect yourself that doing nothing is just not acceptable. If you have a losing trade, fine, they work, they happen, you can't get around it, but fix them, do things about them, and manage them. And
absolutely. Well, what she started out with a bull put spread, and that's all she trades is options. But she started out with a bull put spread, and then she got the one side put to her, and so you showed her how to put on a bull. Let's see, it was a covered put, I believe. Mm-hmm. Anyway, she sat it out until the next month, which would be this past month, and it says she turned that potential losing trade into, she ended up making $8,000 on that trade, which I thought was just phenomenal.
Yep. And that's trading. That's not letting fear control your trading, and that's letting your skill control trading.
That's right. I just wanted to share that with you because she was not going to be able to call in today or next week, and I know that she will to share with you all of the details.
Great.
It's really rather interesting.
I know. It sounds fun. Yeah. Well, thanks for calling.
Okay. Have a good day.
Okay. Bye. So there you go. As I said earlier, that's a good example of you need to manage your winning trades and you need to manage your losing trades. And as long as you know the ways to do that, the steps taken, it's no more difficult than knowing what ingredients to put into a recipe to make some kind of fancy elaborate meal. I mean, some people, me being one of those in that sense, I don't cook. That's just something I've never gotten into. So to me, the thing I make best is reservations. So it really impresses me when people can whip up a meal from basically them. They don't even know what they have in the kitchen, so they start going through what they got, and then they take a little of this, a little of that, a little of this, and all of a sudden there's this tasty, great meal that basically was created from nothing. And trading is the same way. If you have a losing trade, that losing trade can become a winning trade. And you just have to know what ingredients to put in, what conditions that are there that can enable you to do certain things, and do it. Don't let the losing trades win. Don't let fear win. Don't let these things, take control of your trading, because it doesn't need to be. That's why the education is so important. As long as you know all the little things you can do, the mechanics of trading, how the markets work, how the trades work, there are pretty much ways out of just about everything. And even if there isn't, you just take the loss and move on, because like I said, there are so many other opportunities out there. You can't put blinders on and not see those. I think that pretty much covers it. All I want to say is that trading is not that hard. It's not as hard as you think it is. Stick with it. Listen next week. We'll keep going, and hopefully I can teach you guys how to do this correctly. Thank you.